Hey, greetings. Dr. Jeffrey Scott here. This is Monday, March 10th, 2025. This is my Market MRI Pro update. Simple title, Selling Accelerates. It will stop. It always does. The question is when and how much lower. Lots of things spooking the market here. I mean, obviously, we got tariff tantrums. We've got Trump basically calling out early on Monday or over the weekend that the economy may have to go through some pain. And we got the need to have a budget passed by Friday, or we'll go into that Fed watch to see when we run out of money on paying things, which never happens, by the way. So let's take a look at the markets. Again, my name is Jeffrey Scott. This is my Market MRI Pro update, and my email address is marketmripro@gmail.com. Uh, This is for education only. Anything I talk about should be taken in the spirit of education and not be considered investment advice. The intent of this video and all the videos I do is for education, and it's really to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You're only solely responsible for any investment decisions you make. I reserve the right, intent to buy, own, be long, short, anything that I talk about in this video. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades, and I have tools in multiple platforms and am an independent trader. If you like the wealth charts videos, there'll be one tomorrow morning at stocksanddocs.com. I'll do that sometime before 8:30, and it'll be posted by the good folks over at becomeabettertrader.com. If you like live meetings, next one will be June 6th through 8th in Orange County. Greg Mills, GAM72054 at AOL.com is the contact person. It's a low-cost meeting. There's no frills, just myself and 3 to 5 other friends, and we teach a lot over 3 days. If you want more information about what I do, consider joining my Google group. It's free. There's no charge. It's not for solicitation. You do get discounts on my products. And I share a lot of the education things that I've done. We did a 3.5 hour program this weekend that I'll share with anybody in the Top Down Trader group. Why do I care about the group? Because I don't have a mail list. I don't have a way of inviting people. So I just do it through Top Down Trader. Like I said, I'm in a lot of platforms. HGSI is where it all started. And I won't say that I'm in there, but I am a product of a lot of different educators whose stuff is in there built in, especially Ian's stuff. Good stuff. Any questions, give me a call. Um, March 10th today was a no news day. Not a lot tomorrow on Tuesday. The NFIB Optimism Index, it's hard to believe there's a lot of optimism. And then the job openings, and then we get it, the CPI, PPI, and sentiment. So this is going to be a pretty busy rest of the week. After hours on Monday, Oracle was up a bit. Asana got hammered. You could see it was another big day of earnings, and we've still got more earnings the rest of the week. So let's take a look at the Market MRI Pro. If I look at markets on Monday, you could see that the diamonds were down 2%, Russell 2.5, Q's 3.88, the spiders 2.66, and the VIX was up 10.25. And you notice that each of the market indices closed in the lower part of the range. Not a very strong session. Over here I have the NYSE new highs, new lows, and then the new highs minus the new lows, net. Here's the NASDAQ, multiple time frames, and one could see that very negative. And as we know, bull markets are not based upon or built upon new lows. So nothing there looks very exciting to the upside. I look at the one-day change on the S&P sectors. The only positivity was utilities and energy. Everything else was negative. Some of the more defensive plays, staples, real estate, and healthcare were next. The weakness, and it was weak, minus 2.3% in tech, discretionary minus 2.27, communications also down 1%. Tough markets. If I look at the themes that I look at, they were all negative, 100%. If you want to look at what's close to break even, Energy, the expiration, MLPs, home construction with rates coming down. I think that's made a big difference. Renewable energy, preferred stocks, solar, but really we're now getting down to almost 1% down by that point. And over here is a truly powerful tool that is running real time. Every time you hit refresh, it will update it. And it shows in blue the current day, in gray the past day, what percentage of the sectors in each indice were up. And you could see none were up in the S&P 1500. Only 15% of the industry groups were up. 21% of the stocks were up, and only 29% of the stocks are above the midline of their Bollinger Bands. Pretty weak day. NASDAQ, very similar, 15% of the stocks advancing, and the NYSE, 18%. So in every way that you could look at, it was a weak day in the U.S. markets. Now, we wouldn't expect the timing model to change yet because, hey, it was already in a sell. Here's the weekly timing model, and you could see a lot of red. And this is the line that matters at the bottom of the chart because that's the buy-sell signal. This green line is a 13-week new high, new low. It's coming down, but it's not down low enough to say you definitely are going to reverse. You could see it doesn't have to get much further. This was a reversal here. You could see it new high, new low reversed. Here was another reversal. Here's another reversal. We're getting close on the Qs, that's for sure. If we look at the daily in the same tool, you could see the daily ETFs are also in a sell. So the markets are definitely weak. I like the guppy charts to give me a sense of how weak we are over a longer period of time. And there's a lot of things that one can do with these. But I like to look at it with the weekly chart, not the daily chart. And it's important because we haven't broken down far on the weekly charts on any of these, except we're really a mess on the Russell. There's no question that the Russell's the weakest. Now, what has changed here? Notice that these different moving averages are pretty much separate and moving in the same direction. Got a little bit of a crossover here on the RSP and the QQQEs. But look at the mess here and how deep inside the moving averages the IWM is broken down to. So that's the one that's most concerning. And when you look at tough markets, you start to get the stocks trading below. And this is what we saw in 08, 09, a total reversion of this. And fortunately, we're not seeing that right now. Fortunately, if we look at the indexes, they'll pop up in a second, the ones that I watch. And this is updated real time during the day. And if you just highlighted any box and then go into here and enlarge it, so we can see the spiders. We had hoped, hadn't we, that they were going to bounce off the 200, which seemed to be the most likely thing. Now, is this going to be a reversal bar? It doesn't look like a hammer. It's got a little bit of a bottoming tail. Certainly would be nice to see that. But right now, if I have to look at that and say, what are we doing? Probably still going down. The high-low jump's at a minus 100. So we are clearly in an area where it's the most extended to the downside that it's been. Where was it like this before? It was like that here, and we reversed. And it was like it here, and we reversed. So yes, we're at a place we'd expect a reversal soon. It's not guaranteed. And if I look at the weekly, you can see it broke down through the 50 weekly bar. Now, if you put your cursor over it, you could see the market was down 1.73% on the S&P 500 on Monday. Take a look at the Qs. I don't need to go into it. Also minus 100. And let's look at it. Let's see how that's going back further. Again, deeper breakdown than the S&P. And if we look at the last time we were at minus 100, we had it almost here with a reversal. And we had it in here for a reversal. So we're at an area where with this level of extension, you expect a reversal soon. But a pretty brutal day on the Qs, down 3.88%. Well, certainly the laggard in the markets on Monday. If we look at the diamonds, now the diamonds are probably the least bad looking, and they are just sitting on top of the 200-day moving average. They were down a lot less They were down 2% in the market on Monday. But again, the high-low jump is minus 100, and you have to probably go back a long way to find more 100s. We had a couple in here, um, which were areas not here but over here that we bounced. And you go back here to 23 in November, you could see we had the same thing. So look, we got to be getting close to a bounce. Markets don't go down every day forever, but there's no guarantee that it's going to happen tomorrow. Let me just put that back to the way I started. Daily. Yeah, it's a lot of data there, so I don't want that. So let's just go to 1 year worth of data. There we go. The Russell, the worst. If the diamonds were holding up the best, the Russell has just been ugly, and it's bouncing around minus 100 here. And it's really got to be at a place where we're going to bounce soon. And it's getting to recession level multiples, and we're not in a recession. So I really think we are getting close, but you know, what's going to make me jump and get into the market? It's not just that I think we're going to bounce. I'm going to have to see a bounce. And I'm going to look for that O'Neill Follow Thru day, which the first day is probably tomorrow, where it would be valid to see a market trade up over a percent on higher volume. And we'll see if we get that. Right now, the futures are much lower. And, probably looking for an intraday reversal, whether it comes on Tuesday. They've actually reversed a little bit. We'll see what they are when the market closes tomorrow, not where it's at tonight. Now, a VIX spike is something that will tell me I'm at a bottom. And is this the spike? Well, it's higher than it was back here. In fact, it's the highest one going back for 6-8 months. This was dramatic. This day here, the market was, despite the fact closing well off the highs, let's make that bigger. Hopefully it won't change around. The spike closing well off the highs, this session today was up 52%, and it closed well off the highs. How were we in the markets? On the 10th, we were up another 19.21%. Maybe we're spiking. It would feel better to me if we opened down, did a reversal during the day and closed higher, and we saw this thing shoot up to 35 or 40. But we may be done. I'm waiting for the signals. And the dollar continues to be weak as the markets sell off. Bounced a little bit in the market on, did it bounce? Yeah, about 0.5%. Now the commodities, we're getting to this everything down feeling market, and you can see gold and silver. That gold was down a little bit less than 1%. Silver looks like it's giving a flag, down 1.5%. Oil struggling here at a low level. Gave us a tease on Friday, but was back down 1.67, and that's something that makes you worry about what people are thinking about the economy. And then one of my favorite charts right now, because I love technical analysis and I love when things do what they're supposed to do, is natural gas, which had failed multiple times at the 200 on the way down. And then we predicted a breakout, a retest, and a runoff to recent highs. And natural gas was one of the few things that was up in the markets on Monday. 10-year and the, let's see, we get this to go back to what I wanted to, and the 30-year rates. If we look at the markets on Monday, the 10-year was down 1.74%, and the 30-year was down 1.47. So I guess if there's one good thing about this tariff tantrum and the concerns that we have is that rates are coming down, and that's probably why things like the home builders were less bad than some of the other things. Boy, less bad sounds bad. Buckets, we have shifted back to the left, and you could see there'll be a lot of stocks beneath the Bollinger Bands. 26% of the NYSE are below the bands. 29% of the S&P 1500, 30 of the Russell, and 25 of the NASDAQ. Yeah, not quite have to reverse from here, but in normal markets, it doesn't get much worse. So again, a constellation of things that suggest that we're going to bounce. And then on the market breadth tools, which are a bunch of the Ian indicators I talked about over this weekend, the thing that was remarkable to me was that we had a bingo fire And a bingo is sort of the baby out with the bathwater. But this kind of looks like the faucet's falling. Will we reverse? Hopefully we'll reverse. We're pulling into the 200 area on the NYSE. The other thing that says we're probably going to reverse is that this is looking at the percentage of stocks above the 17, the 50, or excuse me, above the 20-day, the 50-day, and the 200-day moving averages. And what you could see is when it gets to this level is typically when we reverse. So again, more evidence that we're getting close to a reversal. You notice these things are all red on both sides. That's new high, new lows, AD lines, and up-down volume. So a lot of things say that this market is poised to reverse, but boy, there's a lot of negative stuff in there. From a ratio charts, I look at ratios of S&P sectors versus the spider, get a sense of what's working. I also look at Bitcoin versus the spider. It is not working. Energy popped up a lot in the market, as did materials. Communications remains fairly strong. Financials have come down. The defensive things of staples, utilities, real estate, okay. Look how weak technology and discretionary are. It's just a quick look at the market of what's working in industrials, which were good over the weekend, still holding up okay. So, I'm about the top down. So I've spent 16 minutes, probably 3 minutes with the 3 or 4 minutes of the slides. And the rest of the time I've been looking at different parameters in the markets. Like my gestalt is we're getting close to a bounce. Thought that over the weekend we're at least one day closer to the bounce right now. But you have to see evidence of that. You can't be buying or acting like you can see in the future. Wait for it to happen. Whether you get a hammer, an intraday reversal, whether you start seeing stocks starting to break out, probably won't see that for a while. Things are so oversold. There is a lot of technical damage. So this is my favorite part of my app, and it's called the JAS layout. And this is the indicator package that I use for trading. But what I really like is we're on the JAS list, which is the NASDAQ plus the NYSE plus the Amex filtered for $1 and 100,000 shares. So I've got 3,461 active instruments. I'm going to go into the top down. And the first thing you notice is there is no sectors that were positive percentage-wise when I collapse all these stocks into their different sectors. So this is broader than the S&P 500. Two-day momentum is the way I like to rank. And what comes up to the top are utilities, energy, and real estate. And here are 488 stocks from those three sectors. Now, one could rank these by percent change if you wanted to. Redfin was a takeout, so not a big surprise that it was up so much. Again, I like that two-day momentum, so I'm going to rank it by two-day momentum. I know a lot of people picked up this tool over the weekend, so I like showing you how I use it in these reviews. AWK, American Water Works, big breakout. I had noticed over the weekend several of the water utilities look good. If you come up here, you have earnings, and you could see the last earnings came out the 19th. Big change, a surprise on both earnings and revenue. Pays a 2.41% dividend, and a forward P, it's pretty powerful, 124. And then over here, you could see the news. So lots of stuff on this chart. Next one down is NEE, which is another utility. Nextera, and this is my local utility. This one's breaking out. So again, what am I looking for here? I'm looking to see when's the last earnings, which was they're out January 24th, so that means they're going to have another one sometime in April. Doesn't make a whole lot of earnings growth, but it's a utility. Revenue was down. That's not great. Pays a 2% dividend. But I really like this pattern where it's pulled back and now it's breaking above the 200. You still got the 50 less than 200, which is not great. It's got good volume, and down here it had momentum and a volume. And this separation here of the green from the yellow shows the relative strength of this instrument is improving versus the spider, and the OBV is turning up versus a moving average. So that one looks reasonable. Aura, another utility. And I'm just going to pick up the pace of going through this list. And this is an online program. That one looks, what a great leader this is, WEC. And now we get to the first of the energies, Exxon, AEP, another utility, SBAC, Edison. So you can run through, ConocoPhillips looks yuck. CNR, Core Natural Resources. This is probably a new ticker, um, and that's what it kind of looks like to me. So I won't pay much attention there. Chevron, CVX. So I can go through the list looking for stocks that are setting up. And, there are some things here that are actually moving up. Southern was one that we liked over the weekend. But these are not my traditional growth stocks, rah, rah, rah. Now I could erase all those. And again, I got my 3461. And I could look at how many of the industry groups were up. Coal, reach, and what I might do is I could look in the ones that were positive, or let's look at the 2-day momentum. That's just my go-to. And let's just take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And these are the 95 stocks in the top 10. And you could just run through these, and let's rank them by 2-day. They are. And we just look one at a time. WSO, kind of a sideways move, trying to break out. Remember, this was a bad session. Now, how many times have I talked about McKesson as a place to go, or Cencora or Cardinal Health when the market is tough? So here's a horrible day in the market, and McKesson, which is one of the drug distributors, the three of which I think are some of the best run businesses in the marketplace, breaking out to what looks like it might be all-time highs. Let's throw in a weekly. And let's look at a monthly. And yeah, it's all-time highs. Look at that. Where's the bear market in drug distribution? Wow. That's all I can say. But we've talked about them multiple times for that reason. GWW, Granger, still below the 200. Here's that water utility. Here is Cencora, also breaking out. NE is that utility. So again, different ways of ranking stocks and trying to find the ones that you like. Now I should be able to 1, 2, 3, 4, 5, 6, 7, 8, 9. Holding down the shift key. Maybe I got to do this. Now, let's just fill these in. I just wanted to show you one other thing. So I could have taken these top 10 and I could have looked at them one at a time. But I also built in a number of trading systems. So we'll take my 2-day momentum up, price greater than $5, 500,000 shares, and I want my weekly trending to be up, hit OK, and the one that comes up to the top is this next Terra, which we saw before, and I really like it here, breaking out above the 200. So that's top-down investing at its best. It's not like we're finding strength, but we're finding the best of what's not a great market. The bottoms up is sometimes more fun. And I already did the scan, or one of the scans that I like, which is right here, which is that 2 days momentum, price greater than 5, value than 500,000, and the weekly bond go up. And this is going on the entire universe of 3,461. And again, here is that NEE we looked at. Alex Baldwin is a real estate. BEP, Partners, TWTX. I never like this pattern. Equinar. So the one that really looks the best here is NEE. But what you can do is you can take that list of 3461 and we've made it so you can develop your own scans as well. So lots of things I can do from a top down to bottoms up. It is not a market that I'm recommending that you think about going and doing a lot of fishing. I think this is, until we get the reversal, I'd rather wait. So let me just show you a couple of things to the long side that I did like when I looked at a bunch of stocks earlier today. Lantheus Holdings, they make a new class of treatment called radioligand therapy. It's the next wave of cancer therapy. They've had their upsies and downsies, and I noticed that they broke out. So let's see. It's not earnings. Earnings are already out. Was it news? Let's see what news says. If you click it, it'll stay there. Um, yeah, it's not really saying what happened here. So no obvious news to drive it, but I really like this chart pattern. I thought this is one that, again, we're talking about in a day of bad charts. LNTH looked good. Another water utility, MWA Mueller. Let's see if that's right. Yep. Nice uptrend, pull back to the 50 and a breakout. That's my favorite pattern. Great volume, CPR, gap, volume, breakout, momentum, relative strength at OBV looks good and not overly extended. Let's see, does it pay a dividend? It pays not much of a dividend. It pays a little dividend. All right. And then the other stock that looked good, just to show you a couple things actually look good in this market, CBOE, one of the exchanges, especially for futures. And it's kind of going sideways here, but I just get the sense it's breaking out here. That's the CBOE. So there are things that are working. Now over the weekend we looked at some home builders. So let's just end with Toll Brothers just to see if these things carry through in the market on Monday. And you notice they were moving up off the bottom, which is what we were seeing, and they did not do well. So hope you got something out of this. It is a tough market. Cash is a position. Don't overtrade. We'll see you tomorrow.